Do you want to make a better decision with your finances? With over 10 years of experience of helping people maximize their money, I've discovered the tips, the techniques, and the strategies that truly make a difference. Today, I'm going to share 10 game-changing strategies to help you master your finances. Let's dive into the conversation and help you take your money management skills to the next level. So you've been struggling with your finances for so many years, and this year you drew the line in the sand and said, I'm going to make better financial decisions. The first thing you need to do is change your mindset. Why? Because you've been programmed that you will always make bad decisions with finances. Not the case. Now, if you want to keep that broken mindset, that broke mentality, turn off the video right now. But if you want to move forward and make better financial decisions, it starts with your mindset. Maybe you didn't learn about money from your parents, your grandparents, or even in school. Now it's on you. It's your responsibility to make the change and learn about money. And changing your mindset is the first thing you need to do. Go from a broke mentality to an abundance mentality. That means that there's no shortage of money in the world. It's only a shortage of mindset and execution, right? So change your mindset from broke to abundance. If you want to make better decisions with your finances, stop overspending and stop impulse spending, get you a free resource, the free money plan budget tracker at thecartergrading.com. This is how you're going to really transform your finances in 2025. The second tip you need to do is have a rainy day fund. Ooh, why? Because life happens. If you have a rainy day fund, which basically is savings, I say start with a mini rainy day fund of $500 to $1,500 in the savings account that you can easily access in the event you need one. So, for example, if you got children and your children is playing on the playground and maybe at a party and jumping on a trampoline, she falls off, breaks her arm, and you're like, oh my God, what do I do? Well, first, take her to the hospital. But monetary wise, make sure you have a rainy day fund saved for things that are unexpected or emergencies. Because these things will be a game changer for sure when you're faced with life's unexpected events. The third thing you need to do is have a money plan or budget. That's right. The dreaded B word is also something that's very vital for every financial plan. Why? Because if you don't have a plan for your money, you'll be broke. Get a copy of the book Broke at thecartergrading.com. Also, a money plan can help you get to where you want to go financially. If you want to be well off financially, the money plan is the roadmap. If you don't hear anything else I say from points 1 through 10, this is the point you really need to dive into money plan. One guy told me, he said, well, I didn't have any debt, so I don't need a money plan. Wrong answer. You will never outgrow the need to manage your finances with a money plan. So a money plan is simply when you have income minus your expenses for the month, and it should equal your income that you earn. So, for example, if you earn $4,000 for the month, plan your expenses to equal that amount. So you want to budget $4,000 on your money plan. So $4,000 earned minus $4,000 planned or spent equals zero. You'll have a zero-based money plan to help you reach your financial goals. This is a real win-win for you and your money. The fourth thing is, I mentioned it earlier, is paying off debt. Ooh. Pay off your debt. Why? Because debt is a thief that's stealing your dreams, hopes, and desires. Here's how. Debt is keeping you broke because you're paying payments like every single month to someone else, right? And you're paying more because you pay back principal plus interest. Interest is the cost of borrowing money or using other people's money, or OPM. Stop borrowing money because it's keeping you broke, paying payments, and you're paying more back than you actually borrow. And who wants to pay a payment every month? I don't, and I don't want you either. Forget about what the culture says to use OPM, to leverage, to go into debt, to use good debt, to build your FICO score, to build your credit score. Scratch all that. Pay off debt and live debt-free. That's the only way to live. The next thing is to use cash. If you're out of debt, you can have more cash to spend on things you want to spend on, like traveling, building a business, giving, doing whatever you want to do that makes you happy, or whatever you feel like you need to do to take care of your family, your community, and people in the world. When you use cash and not rely on debt, you won't have the worry and stress of paying the monthly payments every month and paying extra, because again, when you borrow money, you're paying interest, and interest is a cost of using someone else's money. So pay cash, keep your money in your pocket, and stop making somebody else rich. The next one is to invest your money in things such as mutual funds. If you are ready to invest, after you pay off all your debt, you have savings of at least $500 in your savings account for rainy days, and you're doing your money plan, let's start investing your money to help it grow and maximize it truly to its highest potential. Investing is in putting your money in a vehicle such as the stock market, which may include mutual funds or stocks or ownership in companies. All right, you're giving the company money to finance its operations, and in exchange, the company may give you a dividend, and it also gives you a partial ownership of the company. And when you give that money to the company to use, the company will hopefully maximize the money, grow its profits by providing goods and services that people want and need, thereby increasing the value of the company, and then they'll pay you maybe a dividend, which is money for giving them money to fund their business. That simple. Also, you can invest in a business. You can also invest in real estate if you want to. If you can afford to, and don't take out debt, buy real estate. So I recommend investing in mutual funds, business, and real estate. If you really want to maximize your income, increase your income, gain skills that will help you be more valuable to your employer, or maybe even if you have a business, be more valuable to your clients. If you can gain skills that people value, you'll hopefully be more valuable to them. They'll pay you for the insight and the skill set that you have to make them feel better about themselves, or maybe even look better depending on what kind of service you have, or feel better, or maybe even relieve some pain from the pain points that they have in their lives through your good services and your product. And next, you want to get life insurance. So you accumulated some wealth, you got your mind right with your money, right in a rainy day fund, you're doing your budget, pay off debt, you're using cash, and you're investing, and you also have increased your income. Now it's time to protect that money by having life insurance. Life insurance isn't for you, it's for the people you care about, your loved ones. When you pass away, you want your loved ones to continue to live as if you were still alive. That's what life insurance does. When you get life insurance, you're protecting your family and allowing them to continue to live on your income. If you get a $1 million policy, for example, of term life insurance, not whole life or universal life, not index universal life insurance or IUL, none of that garbage. You want to get strictly term life insurance if you can, and you want to invest that money into the stock market, and then once your spouse will, or your beneficiaries will, and they'll live on 10% of that money. So you made $100,000 in income when you were alive, and they'll replace that income by living on 10% of the proceeds, which is $1 million from the policy. That's how you benefit your family, by providing life insurance so they'll continue to live on the same standard of living as if you were still alive. You also need to get a will, power of attorney, and living will. It's basically simple estate planning. A will says, all right, I want to delegate my assets, things that I own, to a beneficiary when I pass away. All right, you're doing that so you can let someone know that, all right, I don't want my assets to go to someone else, maybe to the court system or be sold. You want them to go to a specific person so they can continue to benefit from the life that you've built up and lived. Power of attorney is basically saying you're giving somebody authority over your assets, your estate, to make decisions as if they were you. And then a living will is basically saying, I want to give someone the responsibility to take care of me if I'm not able to speak for myself, if I am what they call incapacitated, and make decisions on my behalf while I'm about my health. You need those things in your life for simple estate planning, because it's important that you set those parameters regarding your health and your assets. And lastly, And now you have your estate plan and you want to start giving. Give until you're giving out. You made the money, give a lot of it away, create your will, pass it to your children, your grandchildren, and live life fully. These game-changing tips can help you manage, maximize, and multiply your finances so that you can master your finances.